I might be wrong with this dividend aristocrat stock. Hey guys, today we'll be screening ABBV through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. From there, we should determine if the stock is a buy or not at current prices. From these metrics, we can also get the best entry prices for the stock. We'll also be looking at their charts to confirm some key levels and our entry prices. ABBV is a biopharmaceutical company best known for their drug Humira and these other drugs here. It originated as a spin-off of Abbott Labs. AbbVie is a dividend aristocrat which we denied looking further into because it didn't pass my first metric, but this time we'll go through it. AbbVie is currently trading at 160.28 with highest price of 161.18. Current market cap of 283.1 billion with PE ratio of 24.84. They give out an annual dividend of $5.64 per share, a yield of 3.52% of the current price. First metric, we want an EPS multiple lower than 3. It's 3.85. Well, it's a bit high, but not high enough that I'd say easily overvalued. We want an EPS increasing, good, and OSN decreasing. Uh-oh. Look at their shares, guys. They're diluting their shareholders. This is probably because of their high payout ratio. Look at this, 87%, 88%. Guys, this is hurting them. They pay out 88% of their earnings just to give you dividends. Aside from this share dilution, you might want to check their debt levels. Next metric, we want to pay $1 or less for 1% of the money they're making. Meaning, we want to pay 1 PE or less for 1% of their margins. This is based on the lowest margin between the net income and free cash flow margins of the current year and the average of 5 and 10 years. The more data, the better. But in this video, I only use 5 years of data just to show you our process. With this revenue growth, I'd pay premium for the stock. I first used 17.98 here, but then I realized that they do have this high free cash flow margins. Look at this. 34, 36, 39. This is why I use 37.33 instead to divide the current PE and not the 17.98 here. And we'd have a discount of 0.67. Guys, I'm just worried about their dividends because most of this free cash flow is given back to investors as dividends. It's not included here, but I have another metric where I discount the dividends paid to investors to the whole of free cash flow. I do that because you can't really use the same money you give out as dividends to buy back shares, can you? So what we're really paying for here is the remaining 12% of the free cash flow, right? Because 88% is their payout ratio. That's just my worry about this stock being valued too much for having a very small free cash flow left for them to use, to buy back shares and all. But in the long run, if they decide to stop increasing their dividends, everything should be fine. That is, if they still have this high free cash flow margins. Next metric, we want to know our discount compared to when the markets have valued the stock before. By looking at their historical PEs. Of the two highlighted values, we'll use the lowest one to divide the current PE, and we'd have a discount of 1.4. This means the stock is trading at a higher PE now. In conclusion, I think the stock is still trading at a discount. This is on the basis of their margins and not discounting the dividends. Fair value, I have a fair value of $240. I don't own the stock. I think paying premium is only sensible. Would I buy? Sure, but not at these prices. Here are my entry PEs, 26, 28, 30s. Very little margin of safety. And these are their respective prices. And, the multiples. Looking at charts, you might want to wait for a pullback before entering this stock. There's this gap here that you might want to check if this ever gets filled eventually. You know what? Use an entry ceiling of 170. I'm also looking at 115 and 130 levels. I want this stock to retest those levels. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.